about, the leaders of this particular cycle, you count on your hands, like NBIS, ARM, Marvell, AHR. We're all trading the same tickers, but then we all end up with different results, right? And so, like, why would that be? And I kind of like have this belief that, in order to kind of maximize your returns, every single decision you make matters. And so you could kind of imagine, the decisions that you make over time. It's like a decision tree, right? So you either do A or do B, and like every decision will affect whatever happens later on. And so, for example, if you have made a trading mistake, that usually kind of spirals and domino effects into even more trading mistakes. Conversely, if you kind of start on the right foot, so say, starting out the year, you preserve your capital, you make good trading decisions in a poor market environment, and then by the time the market environment is favorable for your strategy, you're in a good headspace because you protected your capital, and then like you could kind of trade the same tickers, and then you get like tremendously better returns than someone who kind of started the year out over trading in a poor market environment, and then they dug themselves a hole. So by the time like, oh, the environment turns, and it's an easy uptrend, they're just not in the financial and psychological headspace to kind of take advantage of it. So like it goes back to trading is making good decisions over time. And like, the difference makers in terms of your performance, it comes from, number one, how deep you understand your edge, right? So when